Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, August 9th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. The goal early this week was for price to snap back and get the midpoint of the recent impulse sell-off. You have the high price here from last Thursday. You had the Friday and Monday sell-off. That 3-day range right there, we were looking for price to snap back to the midpoint of that range, which is 53.60 and change. And we finally got it in the previous session. We missed out by a couple of ticks here on Wednesday, finally, and Thursday, Tuesday, Wednesday, and got it on recently here on Thursday. Friday, we're sitting right around that zone right here. And so we finally got that level, and that gives us a new key range, a newly minted key range to work with moving forward. If we take a look at this key range here from a longer term perspective here, the 100% downside target would be 46.39 and change. So again, if we were to see a continuation to the downside in the next month or even more, that could suggest a 46.39 target down below. From an upside perspective, it puts us beyond 6,000, which could be hit down the road as well, 60.81.5. There is the potential to drop into the 46.30s and then open up a move that takes us up toward 6,081 down the road. So again, this key range gives us some great levels to work with. Because it is such a wide 3-day key range, we could see a little bit of build out inside that range in the middle 50% before we get any kind of major directional conviction. Next week's going to be a big week with inflation data, PPI data, CPI data Tuesday and Wednesday. One of the things we also mentioned, Monday was the huge Monday range was large enough here to keep prices contained most of the week. And we've certainly seen that. We've gone a little bit above the high of Monday's range, but for the most part, we've been mostly contained, building out a large 3, 4, 5-day trading range. And one of the things we'll keep an eye on today is a previous high rejection. A rejection of the previous session's high could open up a reversal back toward the center of the range and back toward the previous session's midpoint. So we could be looking at a fade after trend day back toward yesterday's midpoint of 52.71.5. So we could be looking at a return back down. Not anticipating such high range day today like we've had over the last several days. It could be more digestive as we await inflation data next week. All right, let's take a look here at the NQ. The NQ also got a newly minted key range right here. That is Wednesday's trading. It hit the key range midpoint. You had your Monday high, your Friday low, big impulse sell-off, snapped back, and we are right there right now. So again, another large key range to work with. If we look at the outside targets here, this could be something that plays out down the road as well. A failure to the downside here could open up the 100% downside target. That 100% downside target is basically 15K. 15K is also where 5-year CVPOC is. So we have a composite VPOC sitting there at 15.036. That's a 5-year reading right there. And if we are going to see a further pullback or further selling pressure up ahead, that could be a big time landing spot right there with great confluence. The next level here, even if we did pull back, could be a bounce and a continuation to the 100 upside target. The 100% upside target takes us to 22.083. That could be a 5,000 point rally here from 15K to 22K. That would be a huge move from a longer term perspective. So again, getting this key range really helps to set the boundaries, the edges, and also the future targets down the road. So good thing that we've gotten the midpoint here in both the ES and the NQ. The previous session's high right now is the level to watch for rejection. We've already seen some rejection of that level already in pre-market trading. we could be looking at a fade after trend day that takes us back to the previous session's midpoint. Previous session's midpoint 18,167. That could be a target later on in the day. But again, not anticipating such a high range day like we've had over the last couple of days. Could be more digestive with a downward bias heading into next week's inflation data. Taking a look at crude oil. Crude managed to hold the 72 level. Significant level there. You can see the key range low right there and how price came right to it. It looked like we were going to fail through it during Tuesday's trade. Instead, here Wednesday, this thing rallied tremendously. Huge break back above 74.50. Held that breakout point in the previous session and is holding higher right at this moment. Very nice move off of the lower edge here for crude oil. We could be looking at some sideways action here, mostly up to sideways. So if this thing rallies back towards 78, it could find itself in a range here. CVPOC is 78. It's found itself right around that zone in multiple narrow ranges here over the recent months. So again, we could be looking at further modest strength here, and then once we reach 78, we could be looking at some sideways action up ahead. Looking at gold futures. Gold here trading 24.68 at the moment. This one continues to trend higher and has continued to see new highs, but also deep pullbacks. So even recently here we rallied, got a new high, all-time high, pretty deep pullback. We rally again, new all-time high, another deep pullback. And so this thing continues to show strength overall, but has been mostly contained within the 200-point market structure distribution here. You have 2480 here, 2280 there, still stuck in that overall range. But after this recent pullback, we are seeing some strength here. That could give us another new high beyond 2525, and then we could expect perhaps another pullback down below. So again, very heavy counter trend rotations, but still maintaining a bullish overall stance. Looking at the YM, this one has a wider impulse move. This one takes us from the previous FOMC Wednesday, sold off to the previous Monday here, and has a little bit higher to go, 39,984 to get that midpoint of its key range. Not likely to get that today. Perhaps we can see that level tested here early next week. As of right now, keeping an eye on multiple day highs, as a rejection of those highs could lead to a fade after trend day. The YM has built a tremendous 4-day trading range here. Tremendous 4-day range. The highs are near the same levels. The lows are near the same levels. Look at these midpoints. They're right on top of each other. And again, we've seen a little bit of rejection here off the previous session's high already this morning. That could lead to a soft pullback into the previous session's midpoint, which is currently 39,176. So that we could be looking at a return to that level. Again, not anticipating a super wide range like what we've seen over the last several days. We've had 6 straight sessions over 800 points, one of which was over 1,200 points on Monday. So not anticipating that. Instead, it could be more sideways to down as the market awaits inflation data early next week. Looking at Bitcoin, Bitcoin has had a tremendous bounce back here recently. This thing finding a strong low below 50K, bouncing back, rallying as high as 62,970. So basically rallying about 13,000 points off the 49 lows. That's a significant move here. And again, able to maintain market structure. The market structure of 50K. The next level up is 60K. After that, you have 70K. Those are the major market structure levels right now. Had a pretty strong after hours open, but has definitely put in a strong top here and reverse back down. This market's trying to keep above the 60K level. If it can stay above 60K, you know, it's back inside that 60 to 70K zone. A failure here, and you start to rotate back down. But very solid recovery here. bulls trying to keep price above 60K. ETH also saw a nice recovery here off the lows. As we mentioned before, 2200, a very significant level here. That's a big time level right there for this market. 2200 has held as major support. Big time meltdown from 3600 back to 2200 and was able to hold, bounce, and make it back up toward today's highs of 2735. Not bad at all. Now, this market does need to get back above 2800 in order to start really making a move here. 2800 is about right there. If it can start moving back above that zone, you have opened up the next zone above 3400 here and beyond. So again, very strong movement here off the lows. Perhaps a little bit of build out here, but one of the things we mentioned in our trading room is this heavy dose of selling pressure, this surprise sell-off here could be very beneficial to the spot ETFs that are looking to buy into this cryptocurrency. So again, this could be a huge boost here to those that need to buy for the newly minted spot ETFs, and that could lead to some strength. The other thing here, great market structure at 2200 and S3 right there. That's the third standard deviation below VWAP. Could be looking at a snapback toward VWAP here at about 3100 up ahead. All right, that is it for now. We'll see how this develops here heading into the weekend. Good luck, trade well. I'll see you in the trading room. Take care.